Splendid evening it is to you viewers. Welcome to Equity News Highlights. Thank you for joining us as a broadcast from Hampton Studios. I'm Ibn Mabunda. Let's get started. Border Timbers Limited today issued a report for its performance over the 8 months to the 22nd of February 2019. According to the report, the revenue scaled 15% to $16.4 million, while the profit after tax also scaled 44% to 55% to $4.4 million. And according to the trading update, the improvement in the revenue was mostly driven by better lumber sales, although production was stifled due to power cuts. The company posting a net profit of $4.4 million. BTL was placed under judicial management in January of 2015 after it failed to settle debts owed to its creditors. In November of 2018, the corporation was suspended from the Zimbabwe Stock Exchange for failure to publish results in due course. Now let's just get into the financials according to what they've just released. And if you just check there, you'd realize that they recorded of course the revenue there that is actually recorded a profit after tax of 16.4 from 14.2 in the comparative previous period. You look at the position, this of course would be the cash generated of $5.5 million. Listed exporter Padenga issued a cautionary statement this morning indicating the acquisition of a local exporting company. This is a follow-up to earlier indications that were of course given in their financials. Padenga already exports crocodile meat and skins to Europe and the United States. The EU cancelled meat licenses for Zimbabwe and South Africa, and Padenga moved to get bilateral licenses with European countries. Now, as we make progress, listed exporter Padenga issued a cautionary statement this morning indicating interest to acquire a local exporting company. This is a follow-up to an earlier indication in the 2018 financials, as Padenga already exports crocodile meat and skins to Europe as well as the Americas. During the 2018 financial year, the EU cancelled meat export licenses for Zimbabwe as well as South Africa, with Padenga making a swift move to ensure bilateral licenses with several European countries. Padenga spent $5.2 million on its solar systems as well as upgrading its crocodile pens. KEBS makes a move to increase its transaction fees effective the 21st of June 2019. This is in line with the industry trend, and we have seen several banks increase their transaction fees in a bid to make congruence with inflation that came in at 75.8% in the month of April. ZSE listed Tiger Brands with a significant stake in National Foods has released interim results for the 6 months to 31 March 2019. Key to the results is the fact that National Foods still remains with a huge foreign debt exposure due to RBZ's lack of foreign currency. In a statement accompanying the results, Tiger Brands says that foreign currency challenges worsened in Zimbabwe, particularly in the 6 month period between October 2018 and March of 2019. Revenue declined to $1.0 billion in 2018. Profit scaling 2% to $99.7 million from $98.1 million recorded in the prior comparative period. In March, Equity Access revealed that the Reserve Bank of Zimbabwe had assumed a legacy debt amounting to $54.9 million owed by National Foods to its major grain supplier following an agreement late in 2018. Meanwhile, Nigeria holds interest rate constant at 13.5%, while South African Reserve Bank is expected to release its new interest rates. This concludes our news bulletin. Up next is a review of the news. Welcome back, viewers. It's now time for news review, and with me is Chief Analyst Respect Gwenzi. Respect, good evening and welcome to the show.
Thank you, Eben. It's always my pleasure.
Beautiful. Let's get the ball rolling.
Sure.
Well, let's start by having a look at what we've actually seen play out with regards to the JSE listed Tiger brands, them releasing their financials and them actually highlighting how their performance with regards to National Foods, where there's actually a legacy debt of about $54 million. Would you want to shed more light where that is concerned?
Yes, I think our basic interest would be to in regards to what this means for the general economy of Zimbabwe, and also to the manufacturing sector, and broadly general business in terms of the ability of the economy to suit import demand and also demand for forex, which is prevailing in the market. So I think this highlights some challenges which we are presently facing as an economy. I think our cash crisis has really deepened over the past few months, and I tend to agree with what Tiger Brands is saying. So they're simply reiterating what we already know in terms of the cash, in fact, the forex crisis. So their subsidiary, which is Nat Foods of Zimbabwe, has been failing to settle some of its legacy debt to a supplier of grain, which is a foreign player. So RBZ had taken over that debt, and they had been paid. I mean that debt was paid for in the local RTGS terms. So I think it's just a reflection of the challenges that Zimbabwe has been going through over the past few years, and that those problems still continue to date. But I think of interest would be to see the dynamics around how the foreign currency issue will play out after the liberalization of the exchange market and less controls in the economy. I think just a few days, in the past few days, we have seen government liberalize the fuel market. We have seen them trying to remove their hand in the interbank market so as to possibly stimulate supply, and also they're injecting a bit of cash flow in there as well. So all these dynamics might possibly start to see forex coming into the interbank market, satisfying demand as seen by the huge backlog and also the high demand on that respective market.
So with this development, would we likely see all the legacy debts perhaps actually paid? Because I think
I can't really say all, but definitely if the industry is agreeable to the prevailing rates, to the market rates, to the obtaining market rates, then obviously there's bound to be some increased flows in the very short term. But also there's a dynamic around fundamentals. If you believe that the economic situation is likely to worsen, it would only be rational for you as a player who's holding hard currency to keep on holding to that cash. So rather you would keep your cash flows offshore, or even to keep them within your FCA account, just because you expect a worse off economy. It wouldn't be wise for companies to forgo their foreign currency in the short term when you know that the outlook is not looking as good. But we also know that companies do have short-term demands. They need to procure raw materials from outside, and that needs them to forgo. They definitely need to buy somewhere. And also those companies which are exporting have got a local component of their cost as well, so they need to sell to the highest bidder. So definitely there's bound to be some trades either way. But what was happening in the past few weeks is that there was some twinning arrangement between buyers and sellers of the market, and that was really depriving the formal market of the hard currency. So going forward, I think if money is getting on the formal market and flows improve, then we might see the backlog being cleared to some extent.
Okay. Now, before we can move on to other stories, you did indicate the fact that there's actually been a liberalization of the fuel market. Now, with the new Minister in Energy, Honorable Fortune Chas, who just been sworn in this afternoon, what can we expect from the ministry, and are we likely to see an improvement in the fuel situation?
I think the challenges in Zim, they are not an individual persons. They're not challenges which can be solved by individuals. These are mainly institutional problems, in as much as the minister is energetic, pragmatic, has really been commended across a number of forums. But I think the challenges that we have are quite structural. These are things that cannot be fixed by mere willingness to change things. We need flows. We need the ability to attract FDI. We need to even convince our colleagues in business so that they start trading on the formal market, so that we can be able to increase the liquidity in the economy. And I don't believe that in isolation the minister can really solve these challenges alone. The challenges in the energy market include a lack of forex to even pay for our debts, to those foreign suppliers, and dam levels are currently as low. So we definitely have to find our way into trying to find electricity, from outside. So the minister in isolation cannot solve these challenges alone. We need a macro framework that works. We need flows on the interbank market that can facilitate for us to repay those obligations. So it's a different set of pieces which needs to be connected together to try to move the country forward.
Fantastic. Now on to Padenga. They issued a cautionary statement this morning expressing a supposed acquisition of a particular local exporting business. What do you think is actually playing out there, and what can we expect with regards to that engagement?
So there's a particularly important move by Padenga. What was happening in 2018 was that most companies' earnings were really skyrocketing. If you look at Padenga, they're an export-oriented business, and they were really pushing hard in terms of their sales. So they generated that extra cash flow, and they had to obviously sweat it. So they then had to decide to buy some complementary business, which is also in the forex earning space. It's an exporting business, and so they're now in the stages where they need to make an announcement to the market that this is what we are going to do, and this is the decision that we have made as a board. So I think this is obviously likely to boost their earnings, depending on the nature of the business and the kind of market it has in the foreign space. So I think it's a welcome development. If you also look at the ZSE, the company has really had a very good run, coming from a share price of just 5 cents in 2011 thereabout to a present share price of more than 100 cents. I think that growth in price is a reflection of the strong fundamentals within the company itself. So it's really something that the market is really looking forward to, and I think it will be an exciting thing for shareholders.
And then lastly, they had capital expenditure of $5.2 million skewed toward upgrading their solar systems in light of the power shortages that are actually in the country, as well as 40% that was actually spent in upgrading their pens so as to come to terms with international standards where their crocs are concerned. Would you want to give your assessment of that particular expenditure?
Yes, there's been growing regulation within the sector, the sector where Padenga plays. So there's been growing concern, especially in certain regulatory bodies where they demand high standards. So Padenga had to upgrade certain of its facilities, from pens and so forth. So the investment in solar is particularly to do with allowing for constant water supplies at some of its pens in the Victoria Falls, Kariba area. So I think this was mainly to do with trying to upgrade their operations to levels that best suit the demands of the regulatory bodies across the world, but that gives them a competitive edge, and also it brings them closer to the market which they play, because they play in that very high-end market. So this capex was designed to suit the growing demands around regulation, and they also mentioned, I think within their presentation a couple of weeks ago, that most of their animals they faced challenges to do with diseases in the past year, so they had to increase the rate at which they are changing water, water at some of their pens. So obviously this demanded increased solar investment, which they exactly did in the past year.
Beautiful. Now to talk about Border Timbers, they released a report for the 8 months to 22nd of February 2019, a growth in revenue 15%, a growth in profit after tax of 55% to $4.4 million. Just very quickly, would you want to just to explain what the figures that have been presented with actually mean?
Yeah, I think the top line really went up, but if you are looking at the sales volume performance, which is really the underlying performance, we saw a decline in both lumber and also in terms of poles there. So there's been a huge decline in terms of poles. The demand for poles is mainly tender driven, and there's been low demand on that end. So they realized a sharper decline in terms of volumes from that end. And in terms of lumber as well, they were affected mainly by issues to do with power outages, so they were not able to process much of the lumber in the past 8 months period. So that really affected the volumes. In terms of growth in revenue, it's mainly a function of price increases on the local market. In terms of their export market, it didn't move that much. So the growth in the local portion of their sales actually drove the overall revenue performance upwards. But I think in terms of overall profitability, we saw a jump there, which was impacted obviously by the growth in sales revenue. So that's mainly been how their performance has been arranged.
Now, to talk about the structure and administration of the corporation, they have been under judicial management since 2015. Could we say that these figures are a reflection of positives that have come as a result? And now that they were actually suspended from the ZSE in November of 2018, what can we expect in that regard?
So they were not suspended in November of 2018. They've been under suspension for quite a long time. It's more than 5 years now since Border Timbers has been under suspension. We might actually see them come back on the stock market given this kind of performance. But I think one particular aspect of the company which really is a key highlight of where the company is going in terms of its prospects to come back on the market. In November of last year, an international court ruled in favor of the company with respect to a piece of land which government compulsorily acquired a couple of years back. So that means government has to pay a steep amount running into tens and tens of millions of United States dollars to Border Timbers. So that kind of cash flow, if it gets to be realized, obviously it's gonna come into cheap. It's gonna change the financial position of this respective company. And I think at that point it will be time up for the company to come back to the stock market again. Why? Because performance from an income statement perspective is not truly reflective of the healthiness of the business. Sometimes you might be highly geared, you might have got serious debt, insolvency issues as well, if your assets are below your liabilities, or you might not just be cash flow generative. So obviously, if your balance sheet is okay, then you are likely to also have the power to be posting such serious results. So if that money comes back, I'm sure they would be on a very strong footing to come back on the stock market.
Quite enlightening. Thank you, Respect. Thank you for watching. Up next is a focus on the stock market. Please stay tuned.
Good evening, viewers. Welcome to Markets Daily on Equity Access. My name is Anis Shimbumu. Joining me is the Chief Analyst, Respect Gwenzi. How are you doing today?
I'm doing just good. And you?
I'm doing very fine.
Sure.
Well, as we just delve in quickly, markets are showing a very strong performance today.
Yeah, it's really some strong growth there.
Yes, very, very strong growth. I think key drivers for me today were much to do with the top 10 index. where we have cassava and Econet adding about 5.13% and 2.77%. These guys are due to release a set of financial results maybe by the end of this month. Could this be the reason why?
In a couple of days, definitely Econet is releasing its results, and as market leaders, both the first and the third in terms of market cap, definitely everyone will be looking out for their results. A couple of changes have happened to the operations in the past few months. We saw cassava being spin-off from being spun off from Econet, and obviously the market would want to know the general direction the company is going to take, and also for Econet's retained business. I think it will be key to see how those key drivers voice, and of course, if you look at things like data, those are some of the things that people will be so keen to look at. And cassava has been churning out some products, some very new products into the market, some of them which are mostly tech driven, and so the market is really also be keen to have an appreciation of how those things, how those companies are playing out. But I think I'm more interested in the general direction the market has taken today. Some big leaps upwards, 2 point something percent for all the 3 out of 4 indices. I think this is a reflection of a jittery market in light of what's happening on the interbank market. We saw the parallel exchange today even stretching upwards of 7. I think that really obviously scares of people, and people are expecting some further inflation pressures in the economy. So I think that's my thoughts in terms of what has guided the market this far.
Yes, I would really totally agree with you there, because a lot of people have taken heed, and actually much of the information from how the black market has been performing, as it has showed more reliability, so to say, versus what the interbank market has given us as of late. So yes, I think you're pretty right that inflationary pressure has caused for today's jittery market to actually jump up that much.
It's really been time since we last saw the top counters. All the top 3 counters rising all at once in a single session. I think this is a true reflection of where we're going, and we are also seeing Old Mutual again coming back into the matrix, and I think all those things are pointers towards a market which is consolidating into counters of value.
Okay, right.
Let's try to move on and cap this. Looking at the top prices,
we have Star Africa coming up to 30.43%, leading a pack of 20 bulls, while Art was the weakest performing counter today, coming down 8.33%, with 8 more bears trailing that counter there. So I don't know what would be your take about Star Africa as of late. It hasn't been having much of these kind of movements, but then when it has moved, it has made a significant magnitude of movement.
It's a penny counter. Definitely when it makes a small move, the share price actually responds that much, but we yet to see their results to really figure out what has been changing operationally. But I think it's a counter to watch in the very short term. They've been doing a lot of restructuring, a new plant, and they've been increasing capacity utilization. They've also been sourcing markets around. So I think that would be worth looking at the parallel market. In fact, when you're looking at the FX market in terms of the interbank, closing in there at 4.6 thereabout, quite static from yesterday's levels of 4.5 thereabout. But obviously it's a slight movement. But what's of note here is the rationale behind this market was that there is likely to be a suppression of the parallel rate once the interbank flows start to improve. But we are seeing the rate here still hanging up there. In fact, it's even still pushing northwards.
Yes,
but I think it's a matter of reading the market well. Why? Because banks said were given floors yesterday. I mean, each bank received quite some chunks, but these chunks are not convincing and they're not
Yes.
likely to last. So obviously, traders from the street and traders inside, they do have a connection. They communicate what quantum of money have you received, and is it likely to last this much? So if they know that the chunks are not as convincing, definitely they keep on pushing their own rates. So I think RBZ has to be sincere in terms of that 500 million. If they don't have the money, let them re-strategize, let them look at ways of pushing and converting that 800 million sitting on this FCA into the formal market. But if they don't mean, if they don't really mean it to say we really have got this 500 million, then it's gonna backfire, as we'll see the rate shooting up.
Okay. No, that's fine. Thanks. With respect. That's it from me and Respect and the Equity Access team tonight. Please don't forget to follow, like, and subscribe to our YouTube, Twitter, and Facebook channels.